The American dream. For decades, it's been built on the bedrock of the US dollar's global dominance. But what happens when that foundation cracks? What happens when the world's reserve currency, the lifeblood of the global economy, begins to falter? That's the question haunting financial analysts and policymakers as Japan, a stalwart ally in the world's third-largest economy, signals a move away from the greenback. This isn't just about numbers on a spreadsheet. It's about power, influence, and the future of the global order. The dollar's dominance has long given the U.S. unparalleled economic and geopolitical leverage, but that power is eroding, and the consequences for the U.S. economy could be catastrophic. Imagine a world where the U.S. can no longer borrow cheaply to fuel its massive deficit, where inflation skyrockets as the cost of imports surges, where American consumers accustomed to a certain standard of living see their purchasing power dwindle. This is the potential reality we face as the dollar's grip on the global economy weakens. The alarm bells are ringing. Will anyone listen before it's too late? Japan's decision to loosen its ties to the US dollar is not a rash move. It's a calculated gamble, a strategic play driven by a complex web of economic and geopolitical factors. For years, Japan has watched as the US, burdened by debt and political dysfunction, has printed trillions of dollars, seemingly with little regard for the long-term consequences. This reckless behavior has eroded trust in the dollar, particularly among Asian economies seeking to reduce their reliance on the US. Japan, with its own economic vulnerabilities, recognizes the need to diversify its reserves and forge stronger trade relationships within its own region. The numbers speak for themselves. Japan's trade with China, conducted increasingly in yuan, has skyrocketed in recent years. This shift away from the dollar is not just a symbolic gesture, it's a fundamental realignment of economic power. For decades, Japan has been a loyal lieutenant in the US-led economic order, but loyalty, it seems, only goes so far. As the US falters, Japan is looking out for its own interests, even if it means turning its back on its old ally. Japan's move is just one symptom of a much larger trend, the gradual erosion of the dollar's global dominance. Across the globe, countries are looking for alternatives to the greenback, driven by a growing sense that the US-led financial system is inherently unstable. From the bustling streets of Beijing to the gleaming towers of Frankfurt, the message is clear. The world is losing faith in the dollar. China, eager to challenge US hegemony, is aggressively promoting the yuan as a viable alternative, particularly for trade within its expanding sphere of influence. The Eurozone, despite its internal challenges, remains a formidable economic bloc, and the euro continues to gain traction as a reserve currency. Even smaller economies are looking to diversify their reserves, hedging their bets against the dollar's decline. This isn't just about currencies, it's about the emergence of a multipolar world order, one where economic power is more diffuse and no single nation holds all the cards. The US, accustomed to calling the shots, now faces a world where its influence is waning. The question is, can the US adapt to this new reality, or will it cling desperately to the vestiges of its fading dominance? The US economy, once a seemingly invincible titan, is showing cracks in its foundation. Years of reckless spending, ballooning debt, and a dependence on foreign borrowing have left the US vulnerable to the whims of global markets. The dollar's role as the world's reserve currency has long masked these underlying weaknesses. The ability to print money at will, to borrow cheaply on a global scale, has allowed the US to live beyond its means for decades. But this privilege comes at a price. As the dollar weakens, the cost of imports rises, fueling inflation and eroding the purchasing power of American consumers. Foreign investors, once eager to park their money in safe-haven US Treasury bonds, may start looking elsewhere, driving up interest rates and further strangling the US economy. The US is facing a perfect storm of economic challenges. The question is, can it weather the storm, or will it be swept away by the rising tide of global change? Section 5, the domino effect, trade wars, inflation, and a new world order. The decline of the dollar isn't just an abstract economic concept, it has real-world consequences that will be felt in every corner of the globe. As the US struggles to maintain its economic dominance, we can expect to see a ripple effect across the global landscape. Trade wars, once a distant threat, could become commonplace as nations scramble to protect their own interests in a more fragmented and competitive global economy. Inflation, already a concern in many parts of the world, could spiral out of control as the cost of imported goods surges. Geopolitical alliances, long defined by the US-led world order, could shift dramatically as nations seek new partnerships and alliances in a multipolar world. The old certainties are crumbling and the future is uncertain. The only thing that is certain is that the world is changing, and the US, accustomed to being the architect of global order, is now facing a world it can no longer control. Section 6. The dollar's uncertain future. From hegemon to has-been? The dollar's reign as the world's reserve currency has been long and unchallenged. But like all empires, its dominance is not preordained. The question is not if, but when and how gracefully the dollar will cede its throne. Will it be a gradual decline, a slow bleed as confidence erodes and alternatives gain traction? Or will it be a sudden collapse, a financial earthquake that reshapes the global economic landscape overnight? The answer, like most things in economics, is complex and uncertain. But one thing is clear. The US cannot afford to be complacent. The world is watching, and it is judging. The US must adapt to the new realities of a multipolar world where economic power is more diffuse and collaboration is essential. It must address its own internal weaknesses, from its unsustainable debt to its political dysfunction. Failure to do so could have dire consequences, not just for the US economy but for the entire global financial system. Section 7. Bracing for impact, navigating the coming storm. The world is on the cusp of a new era, one where the old rules of the game no longer apply. The decline of the dollar is just one symptom of this larger transformation, a harbinger of the challenges and opportunities that lie ahead. The question is, how do we navigate this uncharted territory? How do we prepare for a future where the old certainties have vanished, and the only constant is change? The answer lies in embracing adaptability, in fostering resilience, and in recognizing that the challenges we face are global in nature and require global solutions. We must move beyond the zero-sum mentality of the past and embrace a cooperative approach, one that recognizes the interconnectedness of the global economy and the shared destiny of all nations. The road ahead will be rocky, but by working together, we can weather the coming storm and build a more just and sustainable future for all. By Section 8, A New Dawn, A New Order, The Rise of Alternative Systems. As the dollar's dominance wanes, a new financial order is beginning to take shape. This new order is characterized by diversity, innovation, and a rejection of the US-centric system that has held sway for decades. Digital currencies, once a fringe phenomenon, are gaining mainstream acceptance, offering a decentralized and potentially more stable alternative to traditional fiat currencies. Regional trading blocs are emerging, challenging the dominance of the World Trade Organization and fostering greater economic integration within specific geographic areas. This new order is still in its infancy, and its ultimate shape remains to be seen. But one thing is certain, it will be more multipolar, more decentralized, and more reflective of the shifting balance of power in the 21st century. The US, accustomed to dictating the terms of global engagement, will need to adapt to this new reality. It will need to embrace collaboration, compromise, and a willingness to share power on the global stage. Section 9. The time to act is now. Preparing for a post-dollar world. The writing is on the wall. The dollar's dominance is waning and the world is shifting beneath our feet. This is not a time for complacency, it is a time for action. We must prepare for a future where the US dollar is no longer the undisputed king of the global economy. This means diversifying our reserves, strengthening our relationships with other nations, and investing in the technologies and industries that will drive growth in the 21st century. It also means addressing the structural weaknesses in our own economy, from our unsustainable debt to our crumbling infrastructure. We cannot expect to lead the world if we are not strong at home. The challenges ahead are significant, but so are the opportunities. By embracing change, fostering innovation, and working together, we can navigate the transition to a post-dollar world and create a more prosperous and equitable future for all.